Breaking from Wall Street. Today's markets are on edge. Red and green tickers are flashing as geopolitical events send shockwaves through the US stock market. From Asia's trade routes to Europe's energy crisis and political tensions in key regions, global instability is fueling uncertainty. In this video, we'll unpack the major geopolitical hotspots and explain how they're shaping US markets right now. Let's start with the South China Sea. It's one of the busiest trade routes in the world, critical for global commerce and technology supply chains. Any disruption here could hit semiconductor shipments, the lifeblood of US tech giants like Apple and Nvidia. Next, the energy crisis. Instability in oil-producing regions is keeping crude prices volatile. Higher oil doesn't just mean higher gas prices, it feeds inflation, forcing the Federal Reserve to keep rates higher for longer. And in Eastern Europe, rising geopolitical tensions continue to shake commodity markets, from natural gas to wheat. Every flare-up rattles investor confidence and pushes risk premiums higher. So what does all this mean for your portfolio? Geopolitical risk creates a domino effect on US markets. When tensions rise, investors often rush to safe haven assets like gold or the US dollar. That means money flows out of equities, putting downward pressure on stock prices. Supply chain disruptions make it worse. Companies facing delays and shortages often report weaker earnings, and their stock prices drop. And then there are sanctions and trade wars. Targeted restrictions on exports or imports can crush specific sectors. Tech and energy firms have already felt the pain of geopolitical crossfire. Beyond the headlines, the bigger risk is sustained volatility. Markets don't just fear bad news, they fear uncertainty. That's why diversification is more important than ever. Spreading investments across stocks, bonds, commodities, and even different regions can reduce exposure to any single crisis. Defensive stocks like healthcare, utilities, and consumer staples also tend to hold steady during global turmoil, since people still need medicine, electricity, and groceries no matter what. So how do you protect your investments in turbulent times? First, stay informed. Geopolitical events often move faster than markets. Second, don't panic. Focus on long-term strategies, not short-term swings. And third, diversify. A balanced portfolio is the best shield against uncertainty. History shows that markets recover, but it's the investors who adapt that come out stronger. Geopolitical risk may shake Wall Street in the short term, but smart strategies can help you navigate the storm. Subscribe now for more US stock market insights, from pre-market updates to deep dive explainers like this one.